The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, good morning, good morning. Great to be here with you. Beautiful Tuesday morning up here at 7,000 feet, looking out at the mountains. Nice, clear day. As usual, I have put up a chart of the IWM to get the small cap show underway today, taking a look at where we are sitting right there, still in a correction, and of course we are seeing the indexes trading lower today, and of course as I expected, we've got some chat there in the Tiger Den regarding the major news of the day. I gotta tell you, I'm staying off Facebook today because I just can't tolerate all the uninformed opinions all over the political spectrum of everybody shouting and ranting or gloating or whatever it is they're going to be doing. I'm just, I don't want to see it. I don't want to harsh my mellow with all of that right now. You know, one of the things I've said, and of course I'm not the only one, many of the stock analysts and traders and folks that we've had on the show, in particular we had our guest a few months back, Jim Rohrbach, who made a great point about the market action. You know, I'm seeing the news flashes across the screen, stocks down after the Supreme Court decision to uphold the individual mandate here. But you know what? Remember, if you do remember Jim Rohrbach coming on the show and saying the news frequently is looking for some kind of reason, some kind of attribution for stock moves, and frequently, like today, it'll seem pretty clear. You'll be like, oh yes, well absolutely, that's why stocks are moving today. But don't forget, we still have all over the place plenty of uncertainty about so much. Europe remains. We have uncertainty about the economy here in the United States, and you can talk about, I'm not going to, but I'm sure people will talk about the effect of this decision on the U.S. economy. We still have the housing market, although there's quite a bit of optimism that's come back regarding the housing market, and that's a tough one for me to keep my opinion out of, because we do see the jobs numbers continue to be disappointing, but then you get the data showing, well, there's pent-up demand for new household formation. Okay, there you have it. So that's where I'm just really going to not necessarily going to tear my hair out and say this is what's causing markets to go lower today. Who knows? We'll have some news flash tomorrow that could be attributed to a rise on the upside there. So I'm looking at the Tiger Den. I got a little distracted here asking about Facebook. I was just mentioning not the stock Facebook, but just for fun. Let's put it up. Why not? Why not? Let's look at the Facebook stock. Put that up there on Tiger TV, see what it's doing. Okay, trending lower. I just meant in terms of when I go on Facebook, I have friends all across the political spectrum, and I just really do not want to put myself in the position of having to read all the various uninformed ranting and raving that might be going on out there today. That's all. So just going to keep myself free from that particular data input on this day. Okay, so there we have the Facebook chart, and I'm going to put it back on the IWM because, actually, no, I didn't mean to type that in there, typing it in the wrong place. Got a lot of different monitors and screens up here in front of me, as always. Okay, what I wanted to do today, a few things. We just released the latest edition of the Low Price Leaders newsletter, went out after the market closed yesterday. And for those of you who may be new to the show or have not yet checked out the Low Price Leaders, I want to say a few things about that and about my trading philosophy and what we've got going on in that particular newsletter right now. At this juncture, we do have 2 trades on from the small cap arena. And now the newsletter covers 2 distinct areas. The first is stocks priced between $5 and $12, and I'm always going to be screening for fundamental strength. And by fundamental strength, what I mean in that sense is the earnings growth, driven by revenue growth. As I've said many times here, an occasional exception I will make might be for biotechs, and those are situations where you do have revenue but no earnings. The reason I'm not, that sector's doing very well. We are going to look at some healthcare stocks today in honor of the news, but the reason I'm not terribly keen on biotech, even though that is a strong sector at the moment, is just because it can be volatile. It can be very news-driven when you get some kind of clinical trial results that perhaps are disappointing, that can send a stock lower. So that's why I'm not necessarily a big fan of that sector, just because it can be volatile. You often have no earnings in there. Sometimes, though, you get a good stock, one of these smaller cap, lower price names that can be driven by revenue growth, so that's an exception I might occasionally make. All right, so the Low Price Leaders newsletter, stocks priced between $5 and $12, screened very carefully for the basic fundamentals. I know when a lot of people say fundamentals, they mean some metrics that I don't particularly factor in. A lot of people do tend to look at more closely at some of the PE multiples. That's a secondary consideration if I am looking at something. Occasionally, in a growth name in particular, if it's just priced way too high, priced for perfection, you could be getting into trouble if you get into a name with too high of a PE. That is absolutely true. But in many cases, you do have situations where investors look at a certain number, 25, for example, and believe, oh, I can't get into this stock. And sometimes that's just a bit of old school wisdom that was passed around decades ago, but does not really apply to some of the bigger growth names. Now, of course, we are working in the small cap universe, so it's a little bit different in that case. The other piece of the component that the small cap low-priced newsletter follows is small caps with a market cap between $300 million and $2 billion. So that's the area in which we're going to be looking, and that's where we have a couple of holdings on right now in that newsletter, and I'm going to tell you they're both trading to the plus side, both showing nice gains. We have a trailing stop on one of them, a tight stop loss on the other, and pretty pleased with what we're seeing right now in that portfolio. But I have a caveat about this, which is that in this particular type of market condition, I am holding off on new buys at this juncture, and that was made very clear in the newsletter yesterday. Just going to inform everybody, and for those of you who are listening, the big piece of the puzzle, as I've said before, is risk management. But in addition to risk management, I also want to be very cognizant of how I view these particular discretionary trades. This is an area where I have quite a bit of training and experience. As many of you know, I was with Investors Business Daily for many years, and I was one of their instructors. I taught the investing seminars at all levels, from beginning all the way up to advanced, all around the country and in Canada. So this is an area that I have years of experience. However, I have never considered that discretionary portion of a portfolio as being appropriate for the main investing segment for anybody. So in other words, that's not something and particularly when we are talking about low price stocks, when we are talking about some of these smaller caps that can tend to be much more volatile, this is a bucket that should comprise about 10% of your overall portfolio. So really, it is discretionary. I've even heard some people, frankly, and I'll just toss this word out, I've heard some people call it entertainment. I don't necessarily view it that way, even though I do have a lot of fun with it. I view it as a way of perhaps running a small side business where you can trade and make some money off of this if you know what you're doing. But nonetheless, losses have to be kept to a minimum. And frankly, I believe in this environment in particular, I'm really wanting to keep trading at a minimum at this juncture just because of what we're seeing. We're seeing triple-digit upside moves and then some higher trade, then a triple-digit downside move. And it's really not the kind of environment where we can identify any clear trend. I'm calling this a downwardly trending market because there is still quite a bit of selling pressure out there. However, it's not the kind of market where you can even necessarily make a safe assumption about the downside. So that's where the newsletter is at right now, and that's the overall philosophy, is not to be trading as much as possible, but actually to be trading as little as possible. And right now, the best way to do that is to largely remain on the sidelines. And I know for a lot of people, there is the sense, and believe me, I get this too, we have that sense of, oh, I'm missing some opportunities out there. But you know what? There's always another opportunity. It cracks me up when people say things like, well, try to find the next Apple. Well, that's hardly an original thought. Everybody's trying to find the next Apple. But the pressure, I think it's like anything else really in life, is when you put more pressure on yourself, and you kind of get into a bit of a vicious circle where you get what a friend of mine who's a terrific financial coach calls that adrenalized zone. And what she means by that is an area, a zone where the energy and this almost panicked sort of emotion is overtaking, and I think it's very, very easy to see that enter into the trading. So I'm just not going to go there. And this is something I know many of you listening have learned over the years, a lot of trial and error. We do have to make our mistakes as investors and traders. There's no doubt about it. And I think another problem is newer people believe they should be trading as well as somebody who's been in the market for 10, 20, 30 years. And that's just not going to be the case. I mentioned IBD. Even Bill O'Neill over there at IBD has often said it takes a few years to become competent with this. So that's some of the trading philosophy that we're using in the Low Price Leaders newsletter. Check it out over on the homepage of TFNN.com. I'm Kate Stalter. This is the Small Cap Roundup. Be right back after these messages.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, welcome back. This is the Small Cap Roundup. I'm your host, Kate Stalter. Give us a call, 877-927-6648. Take a look at some charts. And one of the things I do also, I should point out, is to be buying into strength, not weakness. I'm going to look at some charts and show some examples of that. I don't necessarily always need to wait for a new price high, by the way. I know there's a lot of methodologies that will do that, but in many charts, that has historically not been a good place to buy. If you go back and look historically, you'll notice that you want to buy the stock as it's trending higher above key moving averages. So shorter term moving averages, you can use the 5-day, you can use the 10-day, you can watch 5 over 10 crossovers, 5 over 15. You can be tracking moving average crossovers, perhaps where the 10-day crosses over the 20-day. But that type of moving average crossover can be, to the bullish side, can be a great indicator that it's time to go long and just watch that trend. Watch the stock as it trends along that particular price line. And as I mentioned, there's a few different ones you can use just depending upon how aggressive you want to be in taking that entry point. And then obviously then you would use either the moving average or a recent term trend to determine what your stop loss would be. So let me do this. I said that I'm not going to get political, but in honor of today's news, we are going to look at a few of the healthcare names, and because this is the small cap show, that's the area we are going to take a look at today. So let's see here. I wanted to start out with one that I remember from back in 2009 as being a big leader. This was one of these oddball little stocks. The ticker is IPCM, and the company has kind of a strange name. It's IPC the Hospitalist. And what's interesting, actually, before I began researching this stock a little bit back in 2009, I mean, I'm not in the medical field. I did not know what a hospitalist is, and I'm sure many of you do recognize that this particular stock is the company, actually, that what the hospitalist means is a doctor who provides services in a hospital. So that person goes around and treats the patients at hospitals and inpatient facilities, and IPC, the hospitalist, provides doctors who fill that position. So, in any case, this particular stock, it has been showing a nice uptrend lately. It's actually, as of today, it is pulling back. It's below its, let me see here, it is pulling back about 2% today, below its 5-day moving average, but well above the 50-day. And I should mention, the 50-day is also an area I do continue to watch, and in some cases, that could be an area where you want to watch for some support, and actually could be an entry point at some junctures right there. So in any case, that's IPC, the hospitalist. And let me take a look just at some other elements here. Now, this particular stock, we have seen some deceleration in some of the revenue growth and in some of the earnings growth, and obviously it had a big decline back in January of this year, and you could see it if you're looking at Tiger TV, well over on the left side of the screen. You could see a big gap down. I'm going to put it over here on a weekly chart, so you do see that's what happened there, but it's rallying up again. As I mentioned, I have not been tracking this for a while. I do not know what the news development was. There was obviously something that happened there, whether it was earnings or something in the news, something that did send this stock down sharply. But nonetheless, one of the big lessons I have learned in being a market coach, being a trading coach, people frequently tend to just write off stocks altogether. And obviously, if you had been in this one at the time, you would have been mad and you would write it off. Frankly, there really would have been not necessarily a whole lot of reason to have been in this one back at that time, just from the looks of this. But you can't ever really write a stock off completely because you don't know when it is going to come back. So these emotional aspects of being angry with a stock are not necessarily the ones that are going to lead you to the best returns in the future. It could keep you out of a potentially good trade or good investment. Okay, we're going to come back in a few minutes with our apolitical look at some healthcare biotech names. I'm Kate Stalter. This is the Small Cap Roundup. Be right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just launched our most exciting sale ever. If you purchase any amount of Tiger Dollars before Sunday, June 24th, you'll receive access to 7 live 90-minute webinars hosted by each of our technicians here at TFNN. Not only do you get a 20 to 30% bonus on your purchase as you normally do with Tiger Dollars, but with this one-of-a-kind offer, you get over $1,000 in added value completely free. Each 90-minute live webinar usually sells for $149, and you get all 7 of them absolutely free. Tom O'Brien, Steve Rhodes, Basil Chapman, Larry Pesavento, Ken Shreve, Dave White, and Kate Stalter, you get all 7 classes completely free. Whether you're an experienced trader or you're completely new to the markets, this sale is perfect for all levels of investors. Don't miss out on our best Tiger Dollar sale ever. Visit the front page of TFNN.com today and purchase your Tiger Dollars before June 24th. Don't wait and risk missing out on this one-of-a-kind offer. Act now.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right. Back with this segment of the Small Cap Roundup, and I'm noticing that on some of my favorite TV channels, financial news channels, they're not obsessing about the European close today. Can't imagine why not. Is there some other news to obsess about today? I don't know. Okay, but we do have the European close. Looks like it's mixed. Okay, so there you have it. So in honor of other news, perhaps today, I am taking a nonpartisan look at some of the healthcare names, and frankly, let's just call it what it is here. The medical sector has been the home to a number of very strong stocks in the past few months. So I've put up a chart there for something that is rallying to some new highs there. BioReference Lab BRLI. Now, this is another one of these that I remember back from 2009. I owned this for a while back in 2009. It had a nice run-up coming out of the bear market. This is a tricky one, though. I've got it up there on Tiger TV on a weekly chart for you, and you can see that this does tend to be awfully volatile. It's a tough one to hold. If I recall this one correctly, I was able to get out of this at the time with a small gain, but just it just behaves in a pretty volatile fashion. It's actually got a beta of 92, so that's a little bit different than what you might expect here, but it still does show quite a few intraday, intra-week big price swings. And, of course, let's take a look at what happened here back in 2011. We had a meltdown in this particular stock, and this is really what I was just referencing when we looked at IPCM before the break. Just taking a look at this huge decline, and once again, it was off my screens. I don't recall what news there was, and frankly, a lot of times with these smaller stocks, this one has a market cap of about $714 million. It's somewhat thinly traded, 241,000 shares a day. With these smaller stocks, they're not going to be in the news when they have something going on. You're not necessarily going to hear it announced on the big three financial news networks, and I watch all of them, and they all tend to focus more or less on the large caps, the widely held, and I understand that because those are the names that many of us and many Americans and many people around the world are holding in retirement accounts and so forth, in 401ks, in mutual funds, so they are the ones that tend to get the most attention. And of course, the large cap fund managers who come on their shows and talk about these, those are the ones that they know about. So in any case, BRLI was well off of my radar in 2011 as it just plunged through the year. Now, it recently formed, let me see if you can kind of see this here, a little bit hard to see. Maybe I'm going to put this up here on a daily chart for you. Yes, I've put BRLI, BioReference Labs. And by the way, this is a company that provides lab testing services for hospitals, physicians' offices. This is a stock that actually, if you look kind of carefully here, you can see a double bottom formation. And as many of you know, by the way, that is one that is used by IBD, but not exclusively. A lot of technical analysts do use the double bottom formation. You do see the little rally attempt right here. Could not clear resistance, though, above that 50-day line. So there was there's a little bit of reason to be suspect on this one because generally, although it did work, so the technical analysts may have missed an opportunity here that in theory didn't look so good but did end up working. Then at some point you have to say, well, it's working regardless of my quote-unquote rules. I'll talk about that in a second. But you do see here it failed to clear that 50-day line back when it made a rally attempt, pulled down into a second leg lower. And that can frequently be an encouraging sign when you do see that further pullback. Does show you kind of counterintuitively that there are more traders and investors that need to exit their position to set the stage for some of the bargain shoppers. And you did see that, in fact, occur. It found support right around that 200-day line, so that was encouraging. And then it's rallied from there and gone on to some new highs. So I want to come back to this idea of maybe when there's some kind of flaw in the formation. And this is something that I've observed for several years, and I've found it kind of amusing. You do see a lot of technical analysts, chartists, maybe people who are somewhat newer to it, not necessarily the most successful fund managers. I would have to say that. They may be people who are more wanting to adhere to a strict set of rules rather than understanding that much of the chart analysis is an art rather than a strict science. And it was just kind of funny to me back in 2010, for instance. I would encounter many people who would be complaining about later stage consolidations or chart bases that were forming perhaps for the fourth, fifth time. And we've seen that well into this year. Many analysts attribute it to quantitative easing. Others just say it's that the market is rewarding winners. Winning begets more winning. In any case, you'll hear a lot of people nitpicking and quibbling, well, this is a later stage consolidation. Well, guess what? You can quibble about that all you want. The thing continues to rise. Can you argue with that? And if you have some sound sell rules in place, trailing stops, stop losses, then you do have a measure of protection in there. Historically, it has been the case that more and more consolidations with higher lows has not necessarily been a bullish indicator, but a bit of that has gone out the window in the last couple of years. Doesn't mean that that's going to be a permanent change. It just means that in the way the markets have been acting in the last few years, alongside volatility, uncertainty, quantitative easing, that's what we've seen. And of course, we always have volatility and uncertainty. I think uncertainty is something that's going to be pretty much present at any time in history. Maybe we have a bias that we think we live in the most uncertain times, but I would say if you went back in history, you'd find there's uncertainty throughout. So, in any case, that's BRLI, which was somewhat of a flawed double bottom formation, did tend to work and did continue to keep rallying. One more thing I want to add while we're looking at this chart here. This has been a stock that has managed to continue rallying even in poor market conditions. And this is an example of one of those things I was talking about where you look at these, you feel like, oh my goodness, I'm missing out on the opportunities by sitting on the sidelines. Looking at this one right now, you could say it could potentially be getting a little toppy, and in any case, it's just way too much of an environment where you could have any kind of news that could drag a stock down. Before we move on, I want to just kind of emphasize that point a little bit more on a weekly chart. So you see some of these huge weekly gains right in here in the prior weeks, and it stabilized a little bit. So would not be surprising, frankly, at this juncture to begin seeing some of these investors and traders who came in at an earlier point in time wanting to take some profits right now. And when we do see general market selling, also not uncommon to see people taking profits in stocks that frankly, perhaps may have nothing to do with any of the news. For example, let's talk about Europe. Who knows if there's something some European politician says, and then you see U.S.-based small caps who do most of their business in North America get sold off. So you see the point. It's still a very risky environment, and I know quite a few asset managers at this juncture, growth asset managers, who are content to be safe, to protect capital, and remain on the sidelines. Let's move on. I want to put up another chart right here of Cantel Medical, CMN. Now you see that this one, actually, I'm kind of liking that little bit of a pullback I'm seeing right now. And that's not exactly, but it's a little bit along the lines of what I was just talking about with BRLI, that when a stock does rally and then does begin to pull back a little bit as you see some profit taking, particularly in a basically trendless market as we're in right now. So you see that this one did form a pretty nice consolidation there, and has rallied to a new high last week and then pulled back again. Not surprising. Just not surprising what we've been seeing in the market to kind of see some profit taking in a few of these stocks. Now, this is a company, this is pretty interesting. This is one also that I've known about for several years. It fell off my screens for a while. It's kind of been off and on my screens. This is a company based in Little Falls, New Jersey, and as many of you know, New Jersey is really a hub for medical and biotech. Not only do you have some of the bigger companies right there, Bristol Myers headquartered there, for example, but you also have a lot of biotechs. And of course, a lot of people do go back and forth between the different companies, moving from maybe a biotech startup to a larger company that acquires it. So quite a bit of medical activity when it comes to businesses there in New Jersey. Little Falls, kind of outside of that Princeton area. where you do see the hub of all that activity. Now, this has a market cap of about 600 million or so. Let me just pull this up right here. Actually, no, it's closer to about 700 million. But this is small, very thin, 94,000 shares traded a day. So right away, that adds to your downside risk potential. It also potentially can add upside risk. And people don't tend to use the phrase risk when it comes to upside, but with these thinner stocks, it can take one or two big investors to decide to enter a position or just decide, hey, I'm done with this for whatever reason, just to put their money into something else, or as we know, that it's hit their price targets. So that is something that to be very aware of with the thinner stocks in particular. That's one of the advantages of when you are in one of these big, widely held names that every large cap fund in the universe is holding. You know that if one guy decides to rebalance and change the percentage of that stock that he is holding, that you may see a tiny effect, but perhaps none at all even. So much more risk with something trading 94,000 shares a day. Now, this is one that is, they make infection control products used not only in the medical area. Obviously, you could see where there's a lot of use for that in medical, but also in some water purifying and other industrial applications. So this has been a pretty interesting stock right now. I actually kind of like what it's doing. I like this little pullback as the market is weakening. Could be setting itself up for some further gains. Now, I've got to just point out, this is one of these examples that I was just talking about where you don't necessarily want to jump in at the high point in a consolidation, because this has typically been one of those, it reaches a high and then it pulls back. So this is one you'd want to enter on some kind of perhaps moving average crossover, and could be much more constructive to do that. Now, we have a caller who wants to talk about a stock that I had on my list of names I was going to bring up today anyway, so I'm going to put this up here on the screen. ICUI. Hi, Warren. Are you there?
Hi, Kate. Yep.
Hi, good.
Stock, I honestly thought this stock would go up, when they passed this healthcare thing.
Mm-hmm.
And so I have a stop like around 52.47 on this, and it's kind of up at its high. But
right.
they make all the tubes that go like out of those IV bags and stuff.
Mm-hmm. Mm-hmm. And this is
it used
doing
to be
well.
a Salt Lake company, but now they moved to California.
That's interesting, isn't it? Most companies would want to do the opposite, you would think, these days.
Well, you're closer to those containers that come out of China.
Right. Okay. That makes sense. That makes a lot of sense. That's right. So, yeah. So this is an interesting name. I like this one, and I like what you just said about expecting what it might do one way or the other, depending upon the news. And you can't always rely on that these days. Thus far, though, this is a terrific consolidation. You know what, Warren? I'm going to come back to this one after the break. We have a commercial break here, but we can talk about this a little more if you want to hang on. We'll be right back in just a few minutes. Okay, great. All right, I'm Kate Stalter. This is the Small Cap Roundup. Stick around. We have one last segment of the show. As always, it's just flown by today. Be right back after these messages.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and they're very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
All right, we're back with our final segment of today's Small Cap Roundup. And before the break, we were looking at a stock called ICU Medical. ICUI is the ticker. Now, this is a small cap. Let me just get the market cap here of about $760 million. And this is also one of those very thin stocks, moving about 88,000 shares a day. And Warren, are you still on the line with us there?
So here's my question. Like on Friday, it had really high volume after, the rest of the market had a betting. And it has good volume, too, on, like, some of those days when the market, like, somebody's buying the stock when the market goes down.
Now, Friday was options expiration, so we saw a lot of crazy high volume on a lot of stocks that you don't ordinarily, and just even on stocks like this one. This is kind of what I was talking about. Even on stocks like this one, that I think just baskets of stocks just get traded like crazy on some of those days. You see unusually high volume on stocks where you wouldn't necessarily expect it on some of those days. So let me see here. So I'm pulling up the daily chart.
So it pretty much has to break out over 54, pretty quick.
I wouldn't. It hit 54 today. Yeah, it's hit resistance near 54. Looks like its high point was 54.11. From looks like that was yesterday. Was 54.11 was the high. You know, it might pull back now. It might have a little area now where it does retreat from some resistance there. I'm not going to predict what I think it's going to do here. And that's really consistent with my view of the whole market. Is I don't predict, because, and particularly right now, we have this incredibly uncertain market where volatility has just been the rule. Now, having said that, this stock has formed a very nice consolidation. Wouldn't be surprised to see if it does pull back and kind of form maybe a little handle type of area right now, and then blast off from there. This is a pretty good example, I think, of where the overall market weakness has served as a weight on this stock. And I went back, I was looking at the weekly chart while we were on the break there, and what I was noticing was that the market conditions have really been the determinant for the most part of how this stock moves, Warren. And right now, yeah, we're just in this kind of trendless market. And where did you enter this one? What was your cost basis here?
Like right around 53.10.
Okay. So you're doing great right now, but just be careful about putting in a stop loss and not letting this fall too far below that buy point.
Okay, thanks a lot, Kate.
All right, Warren, thank you for the call. Thanks so much. All right, great to talk to listeners, and we're about to pretty soon wrap up today's show. I think we have about another minute or so left. And let me just elaborate a little bit on a point that I was just making about the market conditions. In most of these cases, do seem to be the determining factor of how the stock moves. Any stock. I was looking. Let me see here. Have we got this one on a weekly chart? Yeah. So you can see back in 2011. I want to find that big market pullback. Yeah, that's this one right here. This big pullback we had in the summer of 2011. So you do see what happened there. And then subsequently, obviously, in the first quarter of this year, we had a nice rally. So this one moved up very nicely in tandem with the market. You do see that this was making a rally attempt and then pulled back. So different stocks tend to behave differently, but obviously you do see that the market frequently serves as a weight on a stock, and you can go back and look at a weekly chart and get the general history of any particular name and see how it behaved in that regard. All right, Tom Petty's telling me it's time to go. Have a great day, everybody. I believe I'll be on a little bit later this afternoon on with Steve. All right.